This Thursday in Asia is all about the earnings, with a cross-section of pretty interesting companies showing us just how 2014 is shaping up. Bank of China is top of my list. Everyone wants to know how the country's big lenders are performing as the economy slows and bad loans mount. The street actually remains pretty bullish here on Bank of China. 23 out of 31 analysts who we track rating the firm a buy or a strong buy. On the topic of liquidity, China booze giant Guizhou Maotai also reports its earnings. The top-class spirit maker will demonstrate just how well it's recovering from a government crackdown on official spending. Investors are expecting the firm's push into direct-to-retail will help it better tap the public mass market. Looking at that 36% bounce in its share price this year, let's hope they don't disappoint. And as the Beijing car show continues, BYD, the Warren Buffett-backed automaker, will give us its first quarter numbers. Media reports that the firm's March sales plummeted 24% year-on-year, sent the firm's share price sharply lower last week. So watch this space for either confirmation or redemption. And while reform-minded China is promising to shut down aging steel plants, next door in Japan, demand for the metal is actually at a 6-year high. While on the face of it, that's great news for steelmakers like JFE, which reports its numbers, it may indicate stockpiling ahead of the newly implemented sales tax hike, which would also suggest weaker demand lies ahead. Finally, to New Zealand for one last key event here, this time on the economic front. The country's central bank is set to raise rates for the second time this year, hitting levels not seen since early 2011. And if the economy keeps outperforming its developed nation peers, the RBNZ says we should expect more gradual hikes over the next 1.5 to 2 years.